How's it going, everyone? It's Sam. Today I want to talk to you about why crypto is so stagnant and why I think it will change here soon. And this is coming from the great investor Raoul Pal. Now, I also want to cover a couple other things too before we get started on that. But let me know in the comment section, how are you feeling? Overall, how do you feel? I think a lot of us feel like, hey, it's time to get going. But that's what we're going to hit on today, why it should change here soon. But of course, I'm not a financial advisor, all that kind of stuff. If you guys don't mind hitting the like button and subscribe button, I really do appreciate that. I do want to talk about one other thing too before we get started, and there are timestamps underneath the video in case you want to skip around. So one thing that I just want to hit on again is the importance of taking your profits or just having money on the sidelines and putting it into stablecoin. And I know it doesn't sound as sexy, but a lot of stablecoin isn't actually being used at all. It's just sitting idly, not getting any interest. And that's why I think it makes sense to take some profits and make interest on stablecoin. So you could use something like Vires.Finance, and they are a partner of the channel. There's a link underneath to start on their platform. You can just go over and take a look at the website, but you can get a significant amount, up to about 25% on USDT. You can put your portfolio in stablecoin and move it over there, get 25%, or you can go over, move some Bitcoin there, borrow against it, and then you still have some stablecoin on the sideline. So if you guys want to check that out, there is a link underneath the video. I think everyone should have some kind of stablecoin strategy just because it pays way too well, whether it's 10% or 25%, it pays way too well not to have something set up. So we can see that the whole crypto market is pretty much sideways since yesterday, but it's still come down a good amount since before that drop yesterday, because we had kind of a dramatic drop and then we went back up a little bit and then we're still trailing down a little bit. So overall, pretty sideways on the last 24-hour, but we can see here that if we zoom out, I know it's difficult to look at where cryptos were a year ago because a lot of us weren't in crypto a year ago, but you can see if you zoom out, hey, a lot of crypto projects are still way in the profit. I mean, ADA is still up 10x from where it was last year. BNB is up 15x. DOT's up 6x. A lot of cryptos are still up a lot. So zoom out, look longer term, and you'll see that, hey, you still can make a good profit. Even if we're sideways for half the year, we still had huge gains at the beginning of the year. Now, one bullish piece of news before we get to why we're so sideways now is Bitcoin miner Marathon to buy $900 million worth of new ASIC miners. These crypto miners are buying and buying and buying, and they're not doing this because they think crypto is a bad long-term investment. This is big money betting hundreds of millions of dollars regularly that crypto will continue to gain adoption. Over the coming years, Bitcoin's going to continue to appreciate. Let's look at what Raoul Pal says, why we are sideways right now. Now, after this post, we're going to talk about why 2022 will probably be the year for crypto, but that doesn't mean that we won't have shakeouts that happen before that. And I talk about this a lot, but the leverage right now in crypto is very high. Like, we saw a shakeout recently, and that was actually right around the time that this shows here. So when we saw that shakeout, it was on December 27. We saw a big drop from about 52,000 down to about 47. And this is on that day we had 0.216 leverage ratio for Bitcoin. So I don't know if this has come down at all, but we're still at really high amounts of leverage. And I think there could be more shakeouts in the future, which is why I always talk about having some stablecoin on the side. But that doesn't necessarily mean that we're only going to go down. So that's why I'm not selling everything. I don't believe in trying to sell everything and then time it, because of course the time that you do that, crypto will explode, or this will be full of short leverage, and then we'll see a drastic increase real quick. So that's why I don't like to make large buys when we see a lot of leverage in the market, but I continue to dollar cost average smaller amounts, knowing that, hey, over the long term, it's not really going to matter. If we see another shakeout, I like to make bigger buys, especially if we see a lot of blood, a lot of people worried, I like to buy more. But let's go over to Raoul Pal and why he thinks that 2022 will be a big year and why we're not seeing too much growth right now. Raoul Pal just had a very interesting Twitter thread on what's happening in the crypto market now, and I'm just going to cover the most important parts of it but it's kind of a longer thread, but I think he hits the nail on the head with what's happening. He says, first of all, there's a lot happening in crypto, and there's also nothing happening. So Bitcoin volumes have been stagnant since the run-up in 2020. The active wallet addresses for Bitcoin has not gone anywhere either. It's really leveled off since the beginning of 2021. That has been replaced by institutions, here measured by wallets with over $10 million worth. Obviously, it's increased a lot since about mid 2020. It's increased. And if you adjust for price, bigger investors liquidated have barely returned. If Metcalfe law applies, then network growth is currently very slow, hence why price is sluggish. That's why we're not seeing huge explosions in the price. The same is true for Ethereum, but there are a couple different factors that come into play. So due to NFTs and DeFi and the stronger narrative around Ethereum, volumes have remained more elevated. Addresses keep rising. So this is the overall addresses. But active addresses have stagnated all year as people rotate into different opportunities in the sideways market. But with Ethereum, higher volume equals more Ethereum burned. We take a look at that all the time. And then Ethereum staking has reduced supply. Burning plus staking has plus a maintained volume is why Ethereum has outperformed Bitcoin by 4x in 2021. But no real net new capital flowing into the space, attention moving to other chains, which also have proof of stake but earlier network adoption, taking volumes away from Bitcoin and Ethereum. And that's what we've seen with the likes of Avalanche and other similar cryptos. This is creating the rapid rotations that we see in the space, shifting between assets such as DeFi, NFTs, L1s, lots of churn, net, no meaningful increase in market cap and overall sideways market. Many of these L1s have had the same staking plus burn mechanism, but they have smaller market caps, so if their volume picks up, they rise faster in price. All assets which are driven by network effects require the network to grow to rise in value. This is why you see explosive price action in projects that suddenly gain network effects as the market decides that is real traction and what doesn't have real traction. So this has led to a FOMO-driven market where people jump from one project to the next, trying to get in on whatever is moving up. The churning is in fact a sign that the market is broadening out. It also makes it harder to generate alpha as new investors need much more knowledge to generate excessive returns. His view on why the whole sector hasn't increased is that the wages are rising slower than CPI. The cost of living has gone up exponentially, which means that a normal investor doesn't have the extra margin to invest in crypto. He doesn't see stable economic growth and lower inflation for a while, so we are going to have to rely on institutions and hedge funds to allocate meaningful capital. He thinks this should happen probably in Q1, possibly January. Most investors are on the fence right now, saying that they fear regulation, and that's why they're going to stay to the larger protocols. He thinks the hedge fund space has been under allocating towards crypto. He says, though, that over time the market cap of the entire space is going to continue to grow. He says, though, we need more money. We need new money. This is a market to hodl a broad mix of quality names. That's what I do. I don't just bet on one. You have to have a basket, in my opinion. And don't try to chase returns unless you know what you are doing. New capital will flow in over time, and a broader rally when it arrives will bring retail investors and people will FOMO in. The day will come. You just have to not overextend yourself. Don't use leverage. Sit tight. The best advice I've ever gotten was from Paul Tudor Jones, who once told me that the best investors he knew are those whose investment horizon matches their idea time horizon. So if you think crypto is going to grow for the next 10 years, think of it as a 10-year play. So I think a couple important things are, first of all, big money will be flowing in most likely over the coming months. A lot of them took profits Q4 and they're looking to put money back in because, hey, CPI is insane right now and we need to get some kind of return to beat inflation. A 7% return is not good enough when we're inflating CPI by 7.5%. So you want to beat that, and crypto is one way to do it, and they're underinvested right now. Also, don't FOMO in, right? Play the long game. If you think crypto will be huge for the next 5 or 10 years, it kind of gets back to this, right? Don't just look at where we are over the last 2 months. Look at where we're going to be over the next 2 years or the next 5, 10 years. And that's really how you should be investing. So overall, I know it's not the easiest day in the crypto market. It's not the most exciting day either. I think it's kind of quiet. We've had kind of a quiet week because of the holidays, but hopefully things start ramping up here soon. Now, I think this is a time to build out positions that maybe you haven't had enough money in. I know that I've been building out positions a lot over the last month and a half or 2 months since we've seen a dip. So in case you still want to do that, of course, I'm not a financial advisor, but might be a decent time to do that. Now, again, thank you to Vires Finance for sponsoring that early part of the video, and I will see you guys in the next video. Bye.